Everyone's asking, are we heading into another 2009? My answer, no. 2025 is not going to be a crash. It's going to be something else entirely. And if you understand the difference, you can actually turn this market into an opportunity. Let's go back to 2009. That was a full-blown financial crisis. The root cause? Bad lending, subprime loans, and no doc loans, which basically means that you could fog a mirror and get a loan. Banks were handing out mortgages like candy, and then eventually it just caught up. That's all that happened. Just watch the movie The Big Short. You'll see exactly what I'm talking about. Because in that movie, you'll see that Wall Street just packaged those loans into what they call mortgage-backed security. And the whole thing blew up. People were buying homes that they had no business owning. And when prices dipped just a little bit, they bailed, and they mailed the keys back to the bank. That's all that happened. There was no equity, no cushion. Foreclosures skyrocketed, inventory flooded the market, prices tanked, and builders got wiped out. It was a classic credit collapse, and it hit like a wrecking ball. Now, let's fast forward to 2025. What we're seeing now is not a credit crisis. It's a pricing freeze created by interest rates. Mortgage rates jumped from 3% to 7% in just 2 years. This crushed affordability. But here's the key difference this time. Homeowners are not over leveraged. They have a lot of equity. In fact, they're sitting on record levels of equity. Most folks refinanced when the rates were super low and they locked their payments in. So they're not desperate, they're just stuck because interest rates are high. I call it the golden handcuffs of cheap debt. There's a lot of trapped equity right now sitting in a lot of homes and people are not in trouble. Why would you sell and double your mortgage payment on the next place? You wouldn't, and most people aren't. That's exactly what's happening. Here's where it gets interesting. Inventory is slowly rising, but buyers are disappearing. Why? Because high rates have wiped out affordability. We've got listings sitting, price cuts creeping in, but no crash. It's just going back to normals. This is not 2009 where everybody had to sell. It's 2025 and no one wants to move. Very big difference. It's a standoff. Sellers want yesterday's prices and buyers can't afford today's rates. That leads to a frozen market, not a failing one. But here's the kicker. Investors who need to sell, Airbnb landlords, flippers with bridge loans, they're starting to feel the pain. And that's where the opportunities are starting to show up right now. So what do you do as an investor? 4 things. 1. You get patient. You do not chase. You look for motivated sellers, tired landlords, over-leveraged owners who have to get out. 2, you buy on fundamentals because at the end of the day, it's just math. Cash flow is king, as it always has been. And if cash flows at today's rates, you're good. If rates drop later, great. Refinance and increase your margin. That's all. Cash out, refinance, tax-free. Number 3. You watch specific submarkets. This is starting to show up right now. Not every market is softened, but second home areas, Airbnb heavy cities, that's where cracks are starting to form right now. 4, you use creative financing. Sellers are more open to terms. Seller carrybacks, assumable mortgages. You don't need a 7% loan if you can structure a better deal. If you want to avoid mistakes and spot great deals in this shifting market, just download my free single-family due diligence checklist. It's the exact checklist that I give my acquisition team before they look at any property. Just click on the link below. So let's recap. 2009 was a collapse from bad debt. 2025 is a freeze from high rates. Back then, people had no equity. Today, they've got tons. In 2009, people lost homes. In 2025, they're just staying put. But the result is similar. There's less movement and there's more opportunity for those who are ready. If you're an investor, now is the time to build your team, raise capital, and get clear on the criteria that you're looking for. Deals are coming, but for only those who are ready. What if I told you the real estate crash isn't coming? It's already here. It's hiding in the banks. I'm talking billions of dollars of bad commercial loans quietly sitting on the balance sheets, waiting to blow. You're not going to see this on the evening news yet. But if you know where to look, the cracks are already there. So here's the real question. How bad is it? If you're interested, I go into more detail on the next video here.